Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, March 2nd, 2016. So in the trading room today, I kind of said that, if history is going to be our guide, we're going to see the bulls try to ramp it higher, and it's just, it doesn't really make a whole lot of sense to me because they've done this so many different times, and each time they eventually run out of buyers, and when that happens, we just get complete collapses of this market. And I don't think this one's going to be different. Do I think we could go higher? Absolutely. But we are just at levels right now where we have resistance. You can see the resistance, right here. That I'm not sure they're going to be able to bust through this. And if, one of my main reasons is, you could just see the bearish divergences that are in line here, and we've been, overextended going on since February 17th. We never came down and took any kind of full breather. So we're still trading within this wedge right here. This is, the pattern-wise is looking for a move all the way down into, say, the base of the wedge, and that would be someplace down in the, it could be as low as 1892. Do I believe we're going to go that low? I don't know. Right now, what I'm looking for is really a test of the 1945, possibly down to the 1930. And my reasoning is it just, when we've been at these extended levels, and you can see whenever they've done it like this with very little pullbacks, and that's pretty much today what was going on. Very little, the pullbacks were being bid back up. After that happens, we usually, get the drop, and it's either, anywhere from 30 to 40 points. So we are at the top of the wedge on the 15-minute chart. 60-minute has a little more room to go. That's lining up with the 62% retracement. But we're right here, a pretty huge bearish divergence. And, if you look at this spike right here, this is very similar to what was happening as far as with momentum and the price oscillator. And, we popped up a little bit here. But this one, we dropped all the way from 1945 down to the 1880. So this is what I'm talking about. When they stay extended without any breathers whatsoever, after the big move, eventually what happens is they run out of buyers, and then we drop. So I'm still, like I said, whether we're going to come down all the way to the base of the wedge where, that would make sense. I'm really just looking for the move down to the 1844, possibly down to the 1930. And from there, I would rather, regroup and see what is going to play out. Because, like I said, I'm not, I'm not counting out. One of my targets since we are down here was the 2040 area to close this gap. So I'm not ruling that out, that this B isn't going to end all the way here, or wave 2, whatever you want to do, before we head lower. But I just don't think we're going straight up there. I think we are going to get the, that little bit of a, where, say, nail biter that you get people off guard, and people think it's going to be bearish again and we're heading down, which it may be. But I'm just saying the, scare some bulls out before heading up would fit the profile best because of the, the extended bearish divergences and the patterns that are in play. So the 5-minute chart, this is what I was talking about, where, every time this was kind of my clue that they were going to try this, was every time we got down to the 50-day moving average on the 5-minute chart, they were bidding it back up again. So, you know what? You sit there, you let it go. Once they run out of their buyers, which, it maybe today, maybe they have to go a little bit higher. The drop down is still pending, and that's why I didn't close anything today, because we're just too close to resistance as well as bearish patterns to panic. And like I said, I wouldn't be surprised to see the move come down to the 1945, 1930, and I really wouldn't even rule out coming all the way down here before they reset and possibly try to head higher. So right now, the bulls are being the bulls. They've done what they've been doing for the last 4 years. Once they get momentum, they don't stop until they just run out of steam, and then the bears jump on them. It's been really the pattern that's been in place since 2015, and one of the reasons why we've been stuck here, because they try these and then they get pushed all the way back down. Instead of taking, I don't even know how to explain what they're, just taking some breathers, along the way, where you go up and then you take a few days down. It's been all in, all out in this environment, and it's one of those things that just is what it is. You don't want to try to fight that. It's if it's the momentum is moving up, they threw a lot of curveballs on this momentum up, but the thing is that they'll keep going until they run out of steam, and then the bears take over and they keep going until they run out of steam. So like I said, right now we're running into some heavy resistance. We're very, very overextended. We have bearish divergences. I think that the move, at least my expected 30 to 40, possibly 50 point move lower could be coming sooner rather than later. So with that, have a great night, and I'll talk to you guys tomorrow.